Most traders spend years searching for the perfect strategy, the perfect indicator, the perfect setup. They believe profitability comes only from technical knowledge. But after enough experience in the market, most traders slowly realize something much deeper. The market is not only testing your strategy, it is testing your psychology every single day. Your patience, your discipline, your emotional control, your ability to stay calm under pressure. And that is exactly what this video is about. Today, I want to help you understand the complete foundation of trading psychology in a simple and practical way. Because once you understand the psychological side of trading, your entire approach starts changing. You stop reacting emotionally to every candle. You stop chasing trades emotionally. You stop allowing fear and greed to control your behavior. And you begin thinking like a disciplined trader. If you stay with me until the end of this video, you will understand the most important psychological lessons behind long-term profitable trading. And if you want to continue building a strong trading mindset, consider subscribing to Bull Mindset. This channel is focused on discipline, psychology, patience, and long-term consistency. Now let us begin with the first and most important lesson. Trading is mostly emotional. This is something many traders do not understand in the beginning. At first, people believe trading success comes mainly from technical analysis, charts, indicators, strategies, but eventually, emotions become the real challenge. Fear, greed, impatience, overconfidence, revenge trading. These emotional reactions destroy more accounts than bad strategies. Now let us go deeper. Imagine two traders using the exact same strategy. One trader stays disciplined. The other trader reacts emotionally. One follows rules carefully. The other trader overtrades emotionally after losses. Even with the same technical system, results become completely different. Why? Because psychology controls behavior, and behavior controls consistency. Now let us talk about fear. Fear is one of the strongest emotional forces in trading. Fear makes traders hesitate. Fear makes traders close winning trades too early. Fear makes traders avoid valid setups. Fear causes emotional paralysis, and slowly, fear destroys confidence. Professional traders still feel fear, but they do not allow fear to control behavior. That is the difference. Now let us talk about greed. Greed creates another dangerous psychological trap. After winning trades, emotions become stronger. Confidence slowly becomes overconfidence. Risk increases emotionally. Discipline starts disappearing. And eventually, emotional decisions destroy consistency. This is why emotional control matters so much. Now let us talk about another important truth. The market constantly tests emotional weakness. If you are impatient, trading will expose it. If you are emotional, trading will expose it. If you struggle with discipline, trading will expose it. And because of this, trading becomes mentally exhausting for many people, because trading forces self-awareness. Now let us talk about patience. Patience is one of the biggest psychological advantages in trading. Most traders lose money because they cannot wait. They force trades. Chase movement. Trade out of boredom. Trade because they feel emotional pressure to do something. But profitable traders understand something powerful. The market rewards patience. Sometimes the best trade is no trade. That sounds simple, but emotionally, it is difficult. Because the human brain constantly wants action. Now let us talk about discipline. Discipline means following your process even when emotions disagree. Even when frustration appears. Even when boredom appears. Even when fear appears. Discipline is not emotional excitement. Discipline is stable behavior, and stable behavior creates stable results. Now let us talk about another important truth. Most traders depend too much on motivation. They feel motivated after watching videos. They feel inspired after wins. But motivation is temporary. Professional traders rely more on routines and discipline than emotional excitement, because emotions always change. Now, let us talk about emotional reactions after losses. This is where many traders lose control. One loss creates frustration. Frustration creates impulsive decisions. Impulsive decisions create bigger losses. And suddenly, a small controlled loss becomes a large emotional disaster. Now imagine a disciplined trader in the same situation. They take a loss. They feel disappointment, but they pause. They stay calm. They protect their mindset before protecting profits. This emotional stability creates long-term consistency. If this video is helping you understand trading psychology more deeply, consider subscribing to Bull Mindset, because mindset is what separates emotional traders from disciplined traders. Now let us move into another important lesson. Losses are normal. This is one of the hardest truths for emotional traders to accept. Many traders think every losing trade means something is wrong. But professional traders understand probability. No strategy wins every trade. No trader avoids losing streaks forever. Once traders emotionally accept this reality, pressure decreases significantly. Now let us talk about revenge trading. Revenge trading starts with one emotional thought. I need my money back now. And this emotional thinking destroys discipline completely. The trader stops thinking logically. They force trades, increase risk, ignore setups, and usually lose even more money. Professional traders understand something important. Losses are part of trading. Emotional revenge creates unnecessary damage. Now let us talk about overtrading. Overtrading usually comes from emotional discomfort, boredom, fear of missing out, the need for excitement, the need to recover losses quickly. But profitable traders trade selectively. They protect focus, protect discipline, protect emotional energy. And this patience improves decision-making. Now let us talk about confidence. Real confidence in trading is not emotional excitement. Real confidence comes from trusting your process, trusting your discipline, trusting your emotional control. Emotional confidence disappears quickly after losses, but disciplined confidence stays stable. Now let us move into real trading examples. Imagine a trader who experiences 2 losing trades in a row. Immediately, self-doubt appears. Emotionally, they feel pressure to recover quickly, so they enter another trade impulsively. That trade fails too. Now frustration becomes stronger. At the end of the day, emotional decisions caused more damage than the original losses. Now imagine another trader in the same situation. They experience the same losses. But instead of reacting emotionally, they pause. They review calmly. They protect discipline. This emotional stability protects consistency. Now let us consider another situation. A trader experiences a strong winning streak. Excitement appears. They begin risking more emotionally. They stop respecting their rules. And eventually, emotional overconfidence destroys profits. Now imagine a disciplined trader. They experience the same winning streak, but behavior stays stable. Same patience, same risk, same discipline. This emotional control creates long-term success. Now let us talk about another important psychological shift. Profitable traders stop focusing only on money. This is extremely important. Emotional traders think constantly about profits, but disciplined traders focus more on process, execution, risk management, patience, discipline. Because they understand good process creates long-term profitability. Now let us talk about emotional maturity. Emotional maturity means accepting uncertainty calmly, accepting losses calmly, accepting slow progress calmly. This emotional stability changes trading behavior completely. Most losing traders emotionally react to everything. One bad trade ruins confidence. One bad week destroys motivation. But profitable traders think long-term. They understand growth takes time. Now let us talk about self-awareness. Self-awareness means understanding your emotional patterns clearly, understanding what triggers fear, understanding what triggers greed, understanding what creates impulsive behavior, because awareness creates control. Most emotional traders react automatically. Professional traders observe themselves constantly. Now let us talk about ego. Ego destroys many traders. Ego wants to be right. Ego hates accepting losses. Ego makes traders hold losing trades emotionally. But profitable traders think differently. They understand protecting capital matters more than protecting pride. This psychological shift changes everything. Now let us talk about routines. Routines reduce emotional randomness. Stable routines create stable behavior. Many profitable traders follow structured daily habits. Review charts calmly. Journal trades. Review emotional mistakes. Protect focus. These routines strengthen discipline over time. Now let us move into mental frameworks that help traders build stronger psychology. The first framework is process over profits. Focus on execution, not short-term money. The second framework is probability thinking. No trade is guaranteed. Accept uncertainty calmly. The third framework is emotional neutrality. Stay emotionally balanced during both wins and losses. The fourth framework is long-term thinking. Judge yourself over months and years, not individual trades. Now let us talk about practical exercises. One powerful exercise is emotional journaling. After trading sessions, write down emotional reactions: fear, greed, impatience, frustration. This builds awareness. Another exercise is reducing emotional pressure through proper risk management. Smaller risk creates calmer decisions. Another helpful practice is practicing pauses before trades. Before entering, ask yourself honestly, am I following my process or reacting emotionally? Another exercise is reviewing losing trades calmly instead of emotionally. Look for lessons, not emotional self-destruction. Another important exercise is building routines. Routines reduce emotional randomness. Stable routines create stable behavior. Now let us talk about another important truth. Profitable trading often feels boring. And emotionally, many traders struggle with this. They secretly want excitement, constant action, adrenaline. But excitement usually creates impulsive behavior. Professional traders accept boredom, because boring trading is often disciplined trading. Now let us talk about emotional recovery. Every trader experiences difficult periods, losses, frustration, self-doubt. But professional traders recover differently. They do not carry emotional frustration into the next session. They pause, reflect, reset mentally. This emotional recovery protects long-term consistency. Now let us go even deeper. Most profitable traders became emotionally stronger through painful experiences, through losses, through mistakes, through emotional struggles. These experiences forced growth, forced discipline, forced self-awareness. This is how long-term psychological strength develops. Now let us talk about another important truth. Trading psychology is not something you master once forever. It is a continuous process. Even experienced traders continue improving emotional control, continue improving discipline, continue improving patience. Growth never fully stops. Now let us move toward the final message. Trading psychology is not a small part of trading. It is the foundation. Because your emotions control your behavior controls your consistency, and your consistency controls your long-term results. Let me leave you with one final thought. The market will always create emotional pressure. Fear, greed, impatience, ego. These emotional challenges never fully disappear. But the traders who succeed long-term are the traders who learned how to manage themselves under pressure. They became calmer, more patient, more disciplined, more self-aware. And if you continue improving your mindset, your decisions improve. If your decisions improve, your consistency improves. And if your consistency improves, profitability becomes possible. And if you want to continue building that mindset, subscribe to Bull Mindset. I will see you in the next video. Thanks for watching.